Welcome to this week's version of Nichols and Dimes, our weekly video series. Well, as human beings, we tend to take action. If we're feeling positively about something, we tend to take action and move forward on that thing we're feeling positive about. If we're not feeling positive about something, for whatever reason, we tend to not take any action and, do nothing. Why am I bringing this up today is because in the investment, world, if you will, there's a phrase or a terminology and that terminology that helps with the feeling of investors in the current time frame is called investor sentiment. And we're going to talk a little bit about that today. And it's important, really, for you to understand, at least generally, what the feel of the market is in terms of how investors are feeling. Because maybe you inherited money and are not sure whether you should invest or not. Maybe you just retired and have some cash sitting in an account, and you're thinking about maybe investing it, or maybe you're fully invested and you want to start taking some chips off the table to protect your capital. So this is one indicator that money managers often use to determine where the risk in the market is, whether we're at a high risk level, or maybe where there's potentially some opportunity to invest. Investor sentiment. So we're going to dive in today on what that is and why it's important. So investor sentiment, Socrates, he says, if you want to be wrong, then follow the masses. If you want to be wrong, then follow the masses. Now, by and large, the masses, as they say, tend to be wrong. So if the majority of folks think one thing, historically speaking, that is an indicator that the opposite likely will happen. So since 1987, there's been a survey by the American Association of Individual Investors. And that survey has been done once a week. And they ask a simple question. What direction do you feel the stock market will be in the next 6 months? So pretty simple question. Again, what direction do you think the stock market will be in the next 6 months? Meaning bullish, up, neutral, flat, or bearish, down. So do you think the market will be up, the same level, or down? And this is the historical averages since 1987 of that survey, where about 38% of the folks that were surveyed thought the market would be higher or bullish. About 31% thought the market would be flat or neutral. And about a third, about 30%, thought the market would actually be down over the next 6 months. Now, again, this is important. Why? Because many money managers use investor sentiment, so how investors are feeling about the current market environment and where they think the market's going to be in the next, say, 6 months, as an indication of an opportunity, meaning if the markets come down, if people are fearful, maybe it's an opportunity for the money manager to put some money to work, to invest. If on the other side, if investors are greedy and feeling quite euphoric, and they're bullish by and large, maybe that says to the money manager or the portfolio manager, wait a second, if the masses tend to be wrong the majority of the time, maybe I should take some chips off the table. So let's go back to that survey. So the survey, again, has been done since 1987, where they, again, research and ask the members once a week where they think the market's going to be over the next 6 months. So this has been the survey of the last 4 weeks, with the week ending April 13th. So just recently, well, in fact, when you're getting this video, it'll be probably around the 20th, but the sentiment came back at a most recent survey that showed that overwhelmingly folks are quite bearish. So again, according to this metric, 48% of those surveyed were bearish on the market. In other words, they thought, 48% did, that the market would be down over the next 6 months. And you can see again what the weekly results were over, let's say, the last 30 days. Why is this important? I will make the point again, is because by and large, the masses tend to be wrong. So if the majority of investors, at least most recently, are bearish, where they think the market's going to be down in the next 6 months, that may be an indicator that now is a good time to put money to work, at least on a short-term basis. So if you're putting money to work or considering putting the money to work, there's a reasonable indicator that maybe the timing's pretty good, at least on a short-term basis. This is one of the indicators that many money managers and portfolio managers look at to understand how the masses are feeling at any one point in time. And this is one of the indicators that we look at when we're looking at putting, folks' money to work, including other indicators like, financial metrics, for example, ultimately price action, where the trend of the marketplace is, where we are in the economic cycle. Of course, things like you probably heard, of this inverted yield curve, how that could affect the economy, where we are with margin debt. So there's a lot of metrics we look at and other portfolio managers and other financial advisory teams look at to understand where the risk in the marketplace and where it's not. But again, investor sentiment is a very important indicator. It's often known as a secondary indicator to help folks get an idea of what the masses are feeling to, again, give them an indicator of where to put money to work or potentially where to take money off the table. So again, this is the most recent result. We thought it was very telling. And our research has also shown that, at least short term, we have an immense amount of bearishness. In other words, people just not feeling good about the economic environment. Why? Of course, we have the problems that, we're still dealing with the Russia-Ukraine situation. There is some concern about an inverted yield curve. And if you don't know what that is, it's basically short-term rates being higher than longer-term rates. Historically, when that happens, that is a precursor for economic downturn or recession. Of course, rising rates slow down growth companies and high PE companies. So if you're in the risk trade or the growth trade, you've of course probably gotten hit most recently. So all that to say is, if you would like a second opinion on a portfolio or financial situation, here's our website. You can go on our website, click on the Contacts Us tab on the upper right-hand corner, and just send us a message. We're happy to give you a second opinion. Again, just to see if your portfolio is up to shape, if we do have another downturn, if you're protected, or of course, if maybe you want some income, you may consider reaching out to us to give you some options for income as well. Thank you again for watching. Have a great day. Bye-bye.